Hi guys, I'm coming back at you with the second part of that Ford and boom system video. So let's get to it here. Let me look at my notes. Okay, again, why Ford? It moves pretty much in tandem with the QQQ, and I really like that. And I think that when you have a stock like that, that's really cheap, which is good. It's good for beginners. It's really cheap to get into. The options are really thick with high volume. I really like that. And and look at these prices, man. 35 cents, 13 cents, 7 cents. Really good for starters. You know, really good for starter accounts. You go to QQQ and you look, like the 235s are like $3.50, $4, $5, and then you have to go 10 steps out, 10 strikes out. And I really don't like doing that. It's safer to trade at the money. And as the stock moves, the option prices also move with it. And Ford seems like a really solid stock. It follows the QQQ, and because it follows the QQQ, it's predictable. You could see what it's going to do and which way it's going. So let's see. All right, boom system. Let me go over that a little bit here. Let's pull that up. There it is. Okay, so this is what you're going to do on Thursday night, 5 minutes before close. You're going to buy a spread. Okay, so what are you going to be buying? You're going to buy a call option at the money. Okay, it's the last one that's highlighted on Yahoo Options, and then you're going to buy one just outside the money. Okay, you're going to buy this and this. Then over here on the put side, you're going to buy one at the money and one just outside the money, and it's going to be for the current week you're in. Okay, so these are dangerous because these options expire the next day on Friday. Okay, but with extreme danger comes extreme possibility for profit and or loss. Okay, so coming in here, you can all of a sudden make 5 times if there's a little bit of a market movement. That's another thing I like about Ford. Any little market movement gets magnified greatly in its options, and so you can make some decent money like that move on Thursday. The option jumped by 5 times in the first 5 minutes. But I like to get out within the first 5 minutes because of two reasons. Number one, options expire that day, and all of a sudden they start cranking down to zero real fast. You can see down here. Also, I like to play the gap. So, the biggest movement sometimes is between close and open. So the gap is pretty big, and that's when options like quickly jump. Okay, so basically you're gonna have 4 contracts, 2 call contracts, both in 2 call over here, 2 put over here, and you'll make this purchase 5 minutes before market close on Thursday afternoon. You don't want to do that too early, like at noon or at 1, because then things could slip on you. The market can move the wrong way, and then you're not going to be able to utilize the gap as well. You want to get those last prices in for the day to really get that overnight gap push for the morning. So you purchase them 5 minutes before market close on Thursday afternoon, and then at market open, you want to get out all 4 of them pretty quick, within 2 to 5 minutes. Okay, because all of a sudden I've seen like market caps open big, and then within 15 minutes they're closing already as the door swinging back the other way. So you want to take advantage of that morning gap. And again, do not hold your options on Friday that expire that same day. They will expire worthless by the afternoon. All right. So that is that, and let's look at what else I got. When I'm trading Ford, now that's the boom system. You want to do the same week, but when I'm trading Ford, let me come in here and lose this. I want to here. Hold on. Let me get in here. Just a second. I should have had this up beforehand. Sorry, guys. I was unprepared for this part. When I'm trading Ford, generally I don't want options that same week like in the boom system. I want them about a week or two out. Okay? And that's because I don't want any erosion really eating me, and I see that most moves happen within about 3 to 5 days if you're looking at the chart as it's going. So you look here, and this is like the beginning of June, and then after this climb, you're about 8 or 9 days in. So yeah, about 2 weeks out is a good strike prices to be playing with. And I already explained earlier, I don't like getting in when there's a flat line. That means there's some situation going on. No volatility equals death. You need volatility. So when the tracers are flat line, you don't want to get in. At the arrow, that's when I tend to get in, except if it's flat line. Okay, when it comes off the arrow and it automatically goes down or up, that's a good time to get in. And then you ride it up. Now here's the thing: you might say, well, I'll just wait until the color turns. But then I'm looking at these pivot boxes, which is once again on TradingView pivots HL. They will pop up and they tend to call tops and bottoms pretty good. Now what I'm looking at now is I want to see if this is like past painted or repainted to make itself look good. So I'm still testing this. But boy, it could really lock in some profits if this is like, I know these arrows are real time. They pop up and stay there. They don't repaint. So I want to see if these are doing the same thing, because if they are, they're calling some good top and bottom prices. And a few things with these, I don't use them to get in. Okay, I only use them to get out. They will give me an early warning, like all of a sudden it starts coming down here, and if you had held all the way, you would have lost some money. I only use them to get out, never to get in. Remember that. The only time I use a get in signal is when it changes color with a new arrow. Okay, and once again, here's a get out, and you would have lost some money as it went up. But only use them to exit, not to get in. So last thing I want to talk about is something kind of dangerous, but just having a system where you're just like option, 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 and you're making some money here and there, and that could be a long time. Now, if you trade like you're nuts, like I did when I was bouncing options on my 1045 report, I was going 100% in. I was going 100% in, reinvesting 100%. But if you can't emotionally handle that, because you're going to see your account swinging wildly where you're going to want to throw a chair through the window, which I almost did once. It's like I got it up, to about 15 grand, and then on one of the option trades, it went belly up where I lost like 90%, and it went down, I don't know, like to like a grand or $500, and that's when I almost threw the chair, and then it bounced it back up by the end of the month to 30 grand. Very, very dangerous way of trading, but a good way to get some money going. Now you could do it like this with that. If you're going 100% reinvestment, I mean, you can, go $200, $400, $800, 1,600, 32, and then by the end of the month you could be like 5, 10 grand. But know that you could get up to 10 grand, and then look down at your account, and all of a sudden it'll be at 2 grand, then at 1 grand, and it could be bouncing around if you start making mistakes. Okay, get the feel for this. Once you learn how to really follow this, and what the tracer's telling you and everything, usually when the tracer for the green is outside of it like that, that is when you want to sell or get out. And especially when you see this price box, when the tracer's on this side, that's when you want to buy. It's just the opposite with the red. When the tracer's on the outside, you want to get in, then you want to sell when it's underneath. It's just the reverse. I mean, take a look at it, go back, you'll see what I'm talking about. Now, the 100% reinvestment is dangerous, but it's the biggest way to big money that you could come up with. And a lot of people will tell you, well, you're nuts, because one bad trade and you could lose most of it. But I've had a friend that traded like that. He went 5, 10, 15, 70, then back down to 10 after he threw a chair. Then it bounced back up to 50. He finally got up to like 150,000, and that paid for a wing in his house. He had his house expanded, so he did pretty good. If you could emotionally stomach that, and one way to do it is, don't think of it as money when you're looking at your account or looking at your amount on Robinhood. Think of it as a game, okay? Because it's never really your money until you pull it out of your account and put it in your bank account. It's a game. You're trying to spin that up as fast as possible, and it's not real money until you withdraw it and it's yours and you pay taxes on it. So on one hand, I would say just really try to kick ass on that and try to spool it up as fast as you can. You're only alive for so long, and I assume most of you have jobs, so that's your main money-making thing on the side. But okay, well, that's it. I will make more additions as I see fit. So basically what I'm doing right now is I'm just trading forward. and I'm doing the boom system on Thursdays and Fridays, and that's it. I'm not doing the 1045 report anymore because I found in the last 10 to 15 years the market has become more efficient, and there's not that many lapses in efficiency early in the morning like there used to be, so I'm not seeing too much profit. The 3-day drop system, that looks like it's pretty good. The 3-week climb system that I have in my earlier videos, that seems pretty good. But basically for now, I'm just going to be following forward, reinvesting 100% back in as I'm going, and then doing the boom system on Friday. Now, if you want to do another system on Wednesday to Thursday, you're going to have to see which way you think the market's going to go the next day. And instead of, right over here, and instead of buying a spread, like if you think it's going to go down, just do the one out of the money and the one in the money for over here in the puts, and don't do this. And then, or if you think it's going to go up the next day, just do these two. And that's on Thursday. I really only do the spreads from Thursday to Friday because of the biggest magnification gains in options, because it's the day that it expires. So that's what I do. You know, Wednesday to Thursday, I pick a side, and Thursday to Friday, that's when I do my spread. All right, guys, thanks a lot, and that's it for today.